It's Thursday, February the 2nd, and Groundhog Day.
Groundhog Day, and even though we got rain here in the Carolinas, and it's going to get cold, apparently the groundhog saw his shadow.
Well, I think the groundhog is as effective as our government because he's only right 37% of the time.
Well, if he is going to be right, he says that we got 6 more weeks, I guess, of weather. We do have, I will tell you this, Saturday night, it is supposed to be cold.
Is it?
Yes. Our friends up in the mountains are going to have cold and wind, and we are too. But we won't bore you anymore with the weather. But what we will say to you, you should know by now the Jerome Powell on Wednesday increased interest rate.
Increased.
The market was hoping that he would reduce interest rates, but he increased interest rates by 25 basis points.
And I think we're going to see another 2, at least, 25 basis point increases that'll take us through May.
Right.
Is that right?
Yeah, it would be one more, and then May would be the last, right. And that theoretically is supposed to hold. That would get the Fed funds rate in the mid-5 range, and then they're going to wait and see. Now, the market still doesn't believe it. The market believes they're going to reduce rates. We don't believe they're going to reduce rates anytime soon. We think they're determined that it is going to increase it at least 2 more times. He did use the word yesterday, disinflation, which means there is a slowing of inflation. And that was a dovish remark in which he said. Yes. You had in the radio show that we just completed an interesting observation about the mortgage and how we might use that data if it reappears a couple more times as an indicator for us to begin to buy back in the market. Share what that was.
Well, we always say that as real estate market goes, so does the economy. And it looks like that's still holding true. And I think it could be an argument for a softer landing than we anticipated. Since October, the mortgage, or the builder, the companies that build homes, there are 3 or 4 that we track, are up about 50% since October of 22. And then they're up in double digits since January 1. So when you see the builders hanging on like they are and actually flourishing, that tells you you're probably not going to see a complete deterioration of the mortgage industry or the home building industry as we saw in 08, 09.
All right, so if we see another month or 2 of that, that's going to be a positive indicator for us. And then ADP numbers came out this week, and it's a negative number, but the negative is a positive. There was anticipated new jobs to be created of 175,000 new jobs. 106 was created. So you would think, well, that's not good. We only had 106. We're 64,000 or 60-something thousand short. But that is really good because that's what the Fed wants. So if we see a continued ADP number that's under the expected amount, that's going to give the Fed the information they want to potentially stop interest rate increases and at some point in time maybe even lower, and that might be a good buying signal for us. So,
and mortgage rates are dropping. Since November, they're down about 100 basis points, 1%. So, they're still double where they were a year ago, but at least the trend line is moving in a good direction. And because inventory is so small everywhere in the United States, but definitely in the triad, I think you're just going to continue to see the real estate market just kind of chug along for the remainder of the year.
All right. Our nature has always been with you and your money to be cautious, but we're saying to you, and I said it to a client, we talked on the air today, we're probably getting closer to begin to rebuilding these portfolios. We'll share it with you on Fridays as we work through it. You listen to our radio. You can call us, ask us any questions you want. We'd be glad to sit down with you, so all you got to do is call it. We're here for you. We're into a new year. We're into a new month. We do it because it is your money.
And your money matters.
See you next week.